Absolutely. The term reverse mortgage, I think, over the years that I've noticed when I've had people talk to me about it, has had a very negative connotation. I think that what people's misunderstanding about reverse mortgages is they feel that they're put into a product that is offered in the Canadian financial spectrum where their home is being taken away from them. They're able to stay in their house as they go into retirement years, but their families are not able to get access to equity if something was to happen to them and they were going to pass away. So I think that just to make it in simple terms so people do understand what a reverse mortgage is, a reverse mortgage is a product for the age group of 55 and up. So it really is the start of, for a lot of people, those retirement years where they're looking at retirement in the next maybe 5 to 10 years, or they could be retiring at 55. Maybe they sold their business and they're going to have limited income coming in. And so what we're looking at is we look at their existing home and what current debt they have on their property. If they've got a mortgage and let's say they've got some outstanding debt, and the reverse mortgage will consolidate that debt, put it into one new mortgage for you. And basically, it takes the elimination away of a mortgage payment. So the mortgage payments are added into the mortgage as opposed to traditional mortgages where you make monthly mortgage payments, and with every payment that you make, a part goes towards principal and interest. This does the actual opposite. It actually, your balance will increase. So why would you do that? Well, you're doing that because your income is limited. And so we want to make sure that you're financially stable at the time that you are looking at retirement. We're looking at ways to consolidate potential debt so that you are better from a financial perspective. And we're looking to give you some cash flow so that you can enjoy retirement years. I'm going to go through a lot of different products, but the biggest thing on this is that it's tax free.
Oh, that's big.
Yeah.
That's big.
So that's one of probably the only ones that is out there in the when you're looking at it. I mean, right now, if you own a property and you sell it, it is tax free. Like you don't have to pay capital gains on it if it's owner occupied. But a reverse mortgage right now, if you're pulling the equity out prior to you selling that home or you passing away and you enter into this reverse mortgage, you can pull out equity. Now there is a threshold and I'll go through that, but it's tax free. So it helps people get into a better situation. And the amount that's given to you is based on age, but also there's different avenues you can use that money. And this is what we're seeing is we're seeing people use it as a consolidation. In fact, about 66% of reverse mortgages that are done in the Canadian landscape are based on consolidation. What I mean by that is paying out your first mortgage balance and maybe some outstanding debt.
All right, we're talking to Tracy Valko, Valko Financial, and if you have more questions, you probably will, valkofinancial.ca. They can be reached at 519-745-8019. You kind of touched on one of the eligibility markers, which is age 55.
Yep.
Is that arbitrary? Did the government choose that, or how was that decided?
So it was part and parcel with these type of products. They have to be approved by the Financial Services Regulatory Authority, which is called FSRA, and they do have to approve these products. So this is an age that it starts at because this is the time when most people are looking at retirement. In fact, I'm seeing...
You know, as you say that,
Yeah.
someone's listening now, laughing, going, I wish.
I know.
Freedom 55 is
Yeah,
now freedom
exactly.
75. Or
Exactly.
whatever. No, but in theory.
Yeah,
in theory, you
in
should
theory,
start thinking,
yeah.
what's next?
And to be honest, a lot of people are looking to have more simplistic life. They don't want to be over leveraged. They want to not be working as hard, when you're getting into those upper age groups. And so looking at a reverse mortgage, if you have the equity, will help you eliminate that for you and give you the opportunity to maybe travel more and do things that, you haven't been able to do because you've been working so much. So it starts at 55, but when you look at it statistically with mortgages on the reverse mortgage, the sweet spot is about 72. And the reason why I say that, because the older you get, the more access to equity you have in your home. Because if you are going to look at a reverse mortgage, at a 55 age, you're looking at only being able to access about 15 to 20% of your equity in your home.
Oh,
And,
interesting.
Yeah.
Okay.
So, and it might not be enough to be able to cover the balance on your mortgage. Because when we look at it, a 55-year-old right now, the average mortgage amount is about $219,000 and increasing every year.
I was going to say that.
Yeah.
And so, first of all, to get this, you don't have to have paid off your house.
No,
You can
you
still
don't.
have a
You
mortgage. Was the 55 predicated on a day where maybe by your mid 50s you had paid off your mortgage?
I don't think that was. No, I think
That's
it
not
was.
really the factor. Okay.
I don't, but I do think that when it originally came out, I think there was more people that were in that age category that had their mortgages paid off. We still have right now a lot of equity in Canada on mortgage properties, even though the news tells you, different, from what you hear. A lot of it's that negative on the housing market. There is still a lot of cities like BC and Toronto where if you've owned your home for, 10, 15 years, you're going to be very equity rich. And the biggest thing with a reverse mortgage is it's for people that have low income but are equity rich. And what I mean by that is they have a lot of net worth in their home and they don't owe a lot on their mortgage or have a balance on their mortgage or a line of credit. So that's where reverse mortgage can really work because as you get older, you're able to access more. And the reason why I say 72 is because at 72, you can access about 40%, between 40 and 45% of the equity in your home, which seems to be that sweet spot of being able to cover mortgage balances, any outstanding debt. And this is where we look at other options, and I'm seeing why there's been such an increase in reverse mortgages, is people are looking to take out and do early inheritance. So being able to settle out inheritance for their children or their grandchildren before they pass away so they can see the enjoyment of their family members being able to buy a house or do things they want to do, but also because children are having such a hard time being able to buy in today's environment because of affordability. Parents are looking to do a reverse mortgage and not have the financial strain of a monthly payment, and then being able to give their children the money. So you can actually borrow from a reverse mortgage money out of your home and be able to give it to your children as an early inheritance, and then they can use it to buy a home. And I've been doing a lot of that type of product.
And that makes a lot of sense. Why wait till you're gone to be there to see the enjoyment or to help your children, which is happening more and more often, is it not?
It is 100%. And one of the other things that I notice why people are doing these reverse mortgages is they call it the gray divorce. So what we're seeing is an increase of people in their senior years or early senior years separating. And what's happening is because they're, again, equity rich and not income rich, they're having to pull out the equity because one of the partners wants to stay in the house and the other partner needs to buy a home. So they're pulling out the money and restructuring the mortgage, but not having the demand and the pressure of having a monthly payment and then being able to split the proceeds or give the proceeds to their ex-spouse. And that actually has been a growing product. We're seeing a lot of that right now. I don't know if it's the economic environment. I don't know if it's the mindset of people. Maybe they're retired and they look at each other and say, okay, well, what do we do now?
Well, it's interesting you say that. And again, we're making light of something serious.
Yeah,
but there
yeah.
are cases where you feel like a couple has been together but never really had the discussion of what retirement was going to look like. So
Yeah.
I've heard of the person who, well, I thought we were always going to move to the East Coast. And
That's exactly
the other
it.
one's saying, well, no, not necessarily. Or, as you kind of pointed out, family happens. You have family close by and you think, well, no, I don't want to leave them. So the gray divorce.
Yeah, it's called that. So, and I think you're right. Like, and I've also seen, I've sat down with couples and they've talked to me about how they just have different retirement plans. They never really sat down. And when they did, one of them wants to travel all the time. They don't want home ownership. They want to be able to downsize, rent. And the other one wants to live comfortably at home in the house that they've lived in all their life and maybe just enjoy the grandchildren. And I've seen that. And so having this reverse mortgage, this gray divorce, which they're calling the product, is helping people be able to achieve that on both aspects. So it's becoming such a growing product. In fact, it's the number one growing mortgage product in Canada right now.
Wow.
Absolutely. So one of the requirements is that you have to own a home and you have to own the home for at least more than 6 months. You have to be in, it's actually pretty broad on the location. So Alberta, BC, Ontario, the only provinces that we're seeing is a lot like in the Yukon territories. It's not quite established there yet. I think that I think it will grow. It might be not.
Provincially regulated, or
It's a federally regulated program, but it does differ on the lenders. So there are only very limited amount of lenders right now. Having said that, a lot of the banks are working on establishing these products because they know it's such a growing demand in the market. They're expecting it to grow to almost 10 billion in reverse mortgages by next year. So it's about a 25 to 30% increase. And think about on the mortgage market, which has shrunk because of first-time home buyers. The average of a first-time home buyer now is 36. And we're going the opposite way on a reverse mortgage where we're actually increasing. I mean, there's more people that are turning 55 in Canada and up, all right, over the next decade. So they're expecting in this year alone to do at least about 12,000 reverse mortgages, which might not seem a lot, but it actually is.
that's substantial.
It is substantial for sure. So the lenders are Home Equity Bank. There is EQ Bank, which a lot of people would recognize. And then there's Bloom Financial. There's actually another one called Fraction, but it's not one that's just, it's emerging. It hasn't really come out with the full product on the reverse. But there is rumors, and I know there is going to be some of the banks coming out with this product by the end of the year. So you're going to see quite a bit of advertisement, I expect, on it. And then one of the other rules for this type of product is that your house value has to be at least 250,000. So that's probably why you see in maybe some of these remote areas why they're not actually offering it, because some of those values haven't gone up to that to that level yet. And so people could say, and I get this a lot where people say to me, well, if my mortgage is accumulating and I'm not paying down on it, how do you know by the end when I pass away that there's going to be any equity left, and that's why the bank's going to take over the mortgage? Well, the whole premise on this is that when you're getting this mortgage, and I'm going to go to the maximum that you can actually get. So the top end of this is at age 80 and up, you're able to get access to 59% of the value of your home in today's market. So let's say your house is worth $1 million and you're 80 years old and you've got access to 59%, which is 590,000. There still is 49% equity in your property, right?
Okay. And
So
that
you
remains.
And that remains.
Right.
And it's on the premise conservatively that values will increase by about 3% every year. Now, we're in a tough housing market this year, but on average, you're still seeing the overall median value on properties increase about 3%, 2 to 3%. That's pretty conservative. So when you're looking at this mortgage product, you're looking at it that how this gets paid off is either one, you sell your house and you pay off the mortgage, and then maybe you go into a retirement home, or you go live with your family, because that could be for health reasons. Or two is you actually do go into a nursing home, and this type of product allows you up to 180 days afterwards to be able to pay it out. So it gives time for you to be able to move into that retirement home or old age facility easy, without the stress of being able to have to sell the house beforehand. It gives you time to be able to sell it afterwards, okay? Which is nice. It gives you a grace period. And then the third one is if you pass away. So if you pass away, then whoever is on your family members, I assume, or friends, that's on your estate will be required to sell that property. And there is some grace period for that, for you to be able to sell. And then the equity of the home goes towards paying off whatever balance is left on the mortgage, any debt you have outside of that mortgage, and the rest is, given to the beneficiaries on your will. So it's not left to the bank to decide. That's already pre-done. And what I like about this product is it helps people think about their future, and it gives people time to prepare. And I see that too often where people haven't prepared for their future and they're backtracking on potentially times where you can't. And that could be where someone has an illness where they're not thinking cognitively to be able to make that decision on a financial matter. So that's where power of attorneys come into effect, right? So we want to be able to make sure that people are making decisions prior to something like that happening. I mean, we all get old. That's not a bad thing, but we have to prepare, right? And make sure that we're doing what's responsible for ourselves and our families. And I feel that reverse mortgages allows you to start having that conversation and help you build that and prepare for the future, because you don't know. I've seen people retire and the next day they pass away. I've seen people that are thinking about retiring and, they get laid off and things are tough and they haven't prepared enough on their retirement savings. So there's all different scenarios, but it starts the conversation. And I think that this product allows people to do that.
We're talking to Tracy Valko. If you've just tuned in here on Ask the Experts, 570 News Radio. More information available from Tracy's team at valkofinancial.ca. 519-745-8019. Talking about reverse mortgages. And you were talking about people's lack of planning, or maybe you do plan, but life throws you curves. That happens. And then, of course, as you mentioned, I think 72 is the age a lot of people tap into the reverse mortgage. Can part of that be that you try your best to plan for how much money you'll need in retirement, and then you realize, no, that this isn't cutting it, and so you reach out and look into a reverse mortgage? Question for you. You said there's a few different products available or places. How do you know? Do you compare? What do you do? I reach out to you.
Yeah, and that's what it is. Because if you look at every type of product that's out there, and there are a few in the reverse space, it could be very confusing. And it's also not straightforward. So the traditional reverse mortgage is that you have a lump sum mortgage amount that's paying off your existing. So let's say you owe $100,000 on your existing mortgage with one of the banks, and you have $50,000 worth of credit card debt. So we do a new mortgage for you for $150,000, and that pays off your mortgage, pays off the debt, so you have no outstanding debt on closing. The $150,000 goes to pay off those debts, and then you don't have a mortgage payment on that $150,000 that you owe on that reverse mortgage. So basically, you're living off of what your retirement savings is, and not necessarily nowadays with inflation and the limited amount that I feel people get from CPP and old age. It's not enough to be able to live comfortably if you don't have savings. The stat out there right now is 54% of Canadians that are 55 and up either have no savings, or 20% only have about $5,000 or less. That's significant.
Is this because life? Because of
I think
expenses, and you get to an age and go, wow, I have not put aside.
I think that life creeps up to you, at 55. You run so fast in life. You're, having a family, get married, have a family, building a career, working on that, paying, on the mortgage, trying to enjoy life. Things happen in life, right? So it can set you back. And the next thing you know, your kids are older, in their 20s, and you're 55. And you look and you haven't diversified your portfolio, because guess what? Most people don't have either one, a financial planner, or two, spend the time annually to look at that. I think you need to look at it actually at least once a month, and people don't do that. And let's face it, we're a country that financial literacy has not been a priority in our educational systems.
Right, which it should be.
It should be.
And I was just reading about the percentage of Canadians that have a pension, either through a public pension or just pensions. And there are those that do and those that don't, or they're just not knowledgeable about the options at their workplace.
Well, and think about it. Canadian dream is entrepreneurship. We are a country that has a lot of people self-employed or on commission. There should be a mandate that if you're in that type of profession, that you go through financial literacy requirements of a course or a certification, so that you understand how to be able to build for your retirement, because the government's not going to be there for you at the end.
Right.
And that's where I see people fall short, because being an entrepreneur in Canada is very hard nowadays. And you could have been very successful for a long period of time, and then the last 5 years could have hit you with inflation and COVID and tariffs and everything you've got.
Job security.
And all this stuff in your field, and then you're back to square one again. And so as much as people could have had savings, they could have lost it, and I've seen that. And so I don't blame people. It's like, how do we get ahead? And a lot of people don't realize that they're equity rich in their homes, but they're cash poor. And this product will allow you to actually be cash rich and be able to give you access, leverage the equity in your home, which you deserve. You paid it off. Still give inheritance to your children. But at the end of the day, you have to make sure you're taken care of. Put the oxygen mask on first. And 96% of people that are 55 and up want to stay in their house instead of downsizing. Actually, I call it not downsizing anymore. I call it right sizing. So right sizing means that you go into a property that fits the needs of where you're at the time.
Right, of
right?
course, because life changes, right? Your needs and
Yeah, your kids
other
will be
things.
out and you're sitting in a 3,500 square foot house and it's just you.
Oh.
Well, the biggest thing is to educate people, because I think what people think a reverse mortgage is, they have a misunderstanding. So it's making sure that, and what we do as a team is really explain and give the definition of a reverse mortgage.
What are the
right?
things that people you think have wrong, or maybe they make assumptions?
They feel that they're scared to even start the conversation, and when they do, they're like, I don't want my house taken away from me, but I need payment relief. And I'm like, what do you mean? Well, this mortgage product that I heard, this reverse mortgage, I know that the bank will take my house and then my family will have nothing.
Oh my.
And I don't know, like, I have to think back. Like, I've been doing this a long time. And I mean, when I first got into the business, no one talked about reverse mortgages. It wasn't a growing product, but there was a big stigma when it started to become more of a conversation that the banks, for some reason, took away people's houses. They didn't. Like, that's
This
not.
could be one of those rumor things. So I know
Yeah,
a guy,
yeah,
I know
exactly,
someone
somebody.
who once, and you're
Yeah.
like, is that based on anything? Okay, so
Yeah.
let's get down to the truth of it all. If someone is interested in setting up a reverse mortgage, you meet with them, and where do we go from there?
So we really do what we do with every client, is sit down and really look at do a financial analysis. Take a look at where they're currently at with their income, where they are with their assets, what they have diversified right now in investments if they do, and what is the long term and short term on their jobs right now and their outlook of where their employment's going to be. Like, how quickly are they coming up to retirement? Or is it today? Is it in 5 years? And then what's the goal, right? What is it that they want to achieve? Do they want to stay in the house for the next, 5, 10, 15 years? Are they looking to right size, right? Making sure that they're understanding where they're at.
Too much
And
house for where they are right
exactly,
now.
yep.
Okay.
And maybe looking to travel. Like, we look at what are all their goals and wishes so that we can sit down and look at a product and explain to them what a reverse mortgage is. And what I was getting into before is that there's a lot of different avenues you can go on a reverse mortgage. And what I mean by that is that we have someone sitting down with us and they have a balance on their mortgage of $100,000, and let's say they have $80,000 worth of unsecured debt, and they're even 70 years old, right? We're able to consolidate that, but it's not just doing that. We can look at maybe their income is coming down because they're self-employed. They need to have a top up because their dividend income from their investments isn't enough to cover their everyday life experience. We go through exactly what people need to have in a month to be able to live comfortably, not just survive, but live comfortably.
Mm-hmm.
And they want to travel. They want to go see their kids overseas. What is that going to cost on a yearly basis? And so there's mortgage products in the reverse mortgage where we can leverage extra money for them. So either it's given to them as a lump sum, and then we help them with a financial planner, put that money into making money for them, and or we look at using that lump sum and be able to top up their income on a monthly basis with it so that they're not digging into credit cards or lines of credit. So they're basically getting a supplemental income every month based on that lump sum, and we put it into an investment for them.
I get a sense people are stressed by the unknown.
Yeah.
And just by what you're saying, you're kind of reducing my stress. But I feel like reaching out and getting the knowledge and answers, people may have their fingers in a bunch of different financial products or debt and not realize there are solutions.
100%. And when you look at it in Canada, the actual average mortgage amount right now on a reverse mortgage is $172,000. It's actually not a lot. So that goes to show you people are equity rich. They're cash poor.
Okay, now what about when it comes to setting it up? Like, obviously, to set up a reverse mortgage,
Yeah.
the cost and fees involved.
So it's actually quite inexpensive. Depending on the lender that we go with, why I like EQ Bank is because they do leverage more for the client. If you are 80 and above, 80 years of age and above, you can go up to 59%. The other lenders are only 55% of the value of the home, so it gives a little bit more if clients need it. But the fees are a lot less, I find, with Equity Bank when we deal with them. So typically what will happen is There will be an inspection done on the property to make sure it's in, fairly good condition and, it's there and the house is there for an evaluation. There will be a initial legal fee that is done for it and then a processing fee. So that typically works out to be, I'd say at most about $1,500. It's not that expensive, but that cost gets deducted off of the advance. So the client is not out of pocket from their bank account
Oh, interesting.
to cover that
Okay.
fee. It's taken off. So if they're given 150,000, that 1,500 is taken off that advance, right? So that they're not out of pocket on day of closing.
I
So
can almost feel someone listening when you said they come for an inspection.
yeah,
And I can almost hear my mother thinking, "What? They're coming? They're gonna?
Yeah.
Do I have to have the house immaculate? Like,
no,
it's not that. They're
No.
not looking for a perfect home."
no, but they are lending money, and so they do
Yes.
want to make sure the house is there and it exists. And it's a very quick process. I mean, it's quite standard, and a lot of times I'm there as well to help, or my team is there to help walk through this with the. And it's not just the homeowner. A lot of times we have conversations with family members because it tends to be a family decision, right? Even though the homeowner is in retirement age, they still want to make sure their family a lot of times are involved in terms of what their decisions they're
Which
making.
is smart, that
Yeah,
they're
for
making the
sure.
right decision. They don't want to hear on the
100%.
phone later, you had people at your house doing
Yeah.
what?
100%.
Yeah.
So I find it becomes more of a family affair, even though at the end of the day, it is the homeowner that is the one signing on it
Sure.
and is a responsibility. It ends up being that way. But the thing is that, and what I wanted to actually stress and probably kind of clarify, because I think I changed around what I was saying in terms of because people ask me, like, what happens when the loan is due? And what does that mean? Like, what happens if it's got to be paid out? Like, what happens at that point? Well, the only time the loan is due is if the homeowner decides they want to sell. Or why do they want to sell? Maybe they want to go into retirement home. They're in their 80s. Maybe they become ill and they want to go stay with family members,
Right.
right? So that's when the mortgage would be due at that time. Just like if they were selling their house, the lawyer would be paying off the balance that's owed on the reverse mortgage, and the rest of the equity is given to either the homeowner, or the homeowner has a decision to give it to as an early inheritance, right? It's the homeowner's decision. The other part that I want to clarify is that if the homeowner passes during the time that they have a reverse mortgage, so if they pass away, they have actually up to 180 days after that to be able to pay out the mortgage. So it gives the beneficiary of that home enough time to be able to sell that property. So there's still a couple months after the homeowner passes away to be able to sell that property and pay off the mortgage. So they're not like the day after, okay, the mortgage company's coming to take away the house,
'Cause
right?
that's a huge struggle.
Yeah.
Well, I mean, death is horrible anyway, but then when you
Yeah.
have to deal with
It's
all that
emotional,
immediately,
yeah.
so there is that buffer of what, 188 days?
It's 180 days. And where I wanted to correct myself is if the homeowner decides they want to go into a long-term care facility and the house needs to be sold, the actual lender will give up to a year
Oh,
for that mortgage to be repaid. And I think a lot of that has to do with the transition of moving people to a long-term care. What are we doing with all the items in the house? There could be, stuff has to be sold. It has to be, kind of staged the home so it can be
Sure.
sold. So that can take time. So the lender allows up to a year, which is amazing. So there's lots of grace period in this to help people transition, with the circumstance, right? In this type of mortgage product.
I get the feeling when people first meet with you, they walk out of that meeting just, exhaling.
Yes.
Because all of a sudden you've pointed out, even as you're saying right now, there are options that people maybe don't see. We tend to stress about the unknown.
Yeah.
And financial knowledge is what it's all about. You have that, and I love that. Reach out to the friendly team, valkofinancial.ca, VALKO financial.ca, 519-745-8019. You'll get a friendly voice on the other end. You'll have a meeting, and people can just ask questions, right?
And that's it. And it's a longer process because we do have to go through a lot to make sure it's the right product for the homeowner, to make sure that we're putting them in the right reverse mortgage product, and also that we're giving them what they need to be able to thrive in their retirement years, not just survive.
And
So here's a great example of one that we just recently did for a client. The mortgage amount ended up being 500,000. So she was 74 years old. And so what we did is we gave her a lump sum of 300,000 to pay off her existing mortgage, and she had a couple of credit card debts. So the 300,000 went to, it was about 250 was left on her mortgage balance. So we paid that out, and that was with one of the banks. And then she had $50,000 on a couple of credit cards. So we paid those off for her. So that 300,000 was to pay off the debt, and then the remainder 200,000, because remember we gave her a mortgage of 500. The remainder 200,000, what we did is we advanced 25,000, so she had a buffer in her bank account because she was on very limited income coming in. She was just on government pensions, so no work pensions,
Right.
and her husband had passed away. So she had a widow pension, but not enough to be able to not only help her, but she had medical bills as well. So we gave her the 25,000, and then what we did is the remainder of the 175,000 we split into scheduled monthly payments to her of 1,500. So she would have $1,500 deposited into her bank account from that 175,000 over the course of a period of time, until it actually ends up running out.
Sure.
And we can look at restructuring these mortgages. So just so people know that we can restructure them as they get older. It depends if it needs to be. But that way there, we were able to help her, give her cash flow on a monthly basis to pay her medical bills, to pay for her transportation to the hospital for visits, to give her the ability to be able to stay in her home because she was in a one floor, it was a bungalow, so it worked out very well for her. And to be able to have her children come and visit her there, and also to be able to get a nurse to come in and see her. That way there, we gave her peace of not having a mortgage payment, so we paid off her debt and then paid off her credit. And the relief of that woman,
Oh, I can only imagine.
and also the gratitude of being in a home, because you have to remember, a lot of people, I mean, it really doesn't matter what age it is, a house is your safe place. It is the emotional attachment you have and pride of what you've been able to accomplish over the years of, paying off, or the memories you created. It was the house her and her husband had first bought. And life has happened, and she still had a balance on her mortgage. She helped everyone else, right? So it's a nice way to be able to help people back again and stay in, oh my God, the relief. But I also think the longevity we give people because they're not financially stressed, right?
Even as you described how you set up different things and looked after this, that alone for one individual, never mind a senior that has health issues, to try and organize that yourself wouldn't happen. And so I can imagine her stress release as you set all that up for her. Wonderful.
And she's been in that house so long that, I mean, the actual equity in her house was very significant. The value of that house came in at about 1.5. And
When you say value, by the way, determine from a real estate standpoint?
Inspector, so an inspector,
okay.
an appraiser,
Okay.
right? Appraiser. So she has the equity in the property, but I mean, when you're on limited income, you're not qualifying for a regular mortgage.
Right.
And this way, and the question that it will probably lead to, and I think one that you were going to ask me is like, well, what's the rate on reverse mortgages, right?
This is the stressor in this roller coaster ride of interest rates. So do interest rates and compounding interest affect the amount owed over time?
It does. So compounding interest will accumulate because you're not making payments on the mortgage. So they will be added on. So if her payment worked out to be $2,500, that is going to be added to her balance. Instead of her balance being $500, it will accumulate each month, right? So it doesn't decrease, it accumulates. And the compound interest will as well. Now, the interest rates on reverse mortgages are not competitive in the marketplace like a regular mortgage in Canada. Interest rates right now on a regular mortgage, you can get, give or take, around 3.89% on a 5-year fixed. These mortgages are more in the range of between 5.5% to 6.5%, 7%, depending on where they are in the market. So they are priced higher. The terms you can get are 1, 2, 3, 4, 5-year terms. and then it's renewable, right? We can take a look and see where the client is or where life is at that point for them.
Is one of the terms more popular, or does it really depend on the individual situation?
I think it really depends on the individual situation. I find more people doing the 5 year,
Okay.
right? More people stay in their houses. That's just bottom line in Canada. It's very hard to find rental spaces that are inexpensive and you're on limited income and it's a safe place,
Yeah.
safe neighborhood,
People
and
are revisiting,
comfortability.
thinking,
Exactly.
wait a minute, the grass is not always greener.
It's not.
They're falling back in love with where they are.
Yeah. And they could potentially have a family member come in and help support them. So we're seeing that. We're seeing more migration of families coming together in the house. And, if the person's got the space, which more than likely they do, younger people aren't able to buy as quick. It ends up being, a win-win for people in a lot of cases. So I think that when you look at interest rates, they're, no, they're higher, but it's a product that is there for a reason. And, there is a risk to the lender to some aspects because, they can, on a conservative note, they look at values going up 2 to 3%, but we could have markets in the road that are just flat and values don't increase. And then the next year they increase 8%. But on average, they're banking on 2 to 3%. So equity builds up. Yes, the mortgage amount increases, but if the homeowner passes away during the course of living in that house with that reverse mortgage, that balance is paid out, but there's still equity in that home because remember, the maximum that the lender will go to, depending on age, is only 59% of the value.
Right.
And if they pass away 10 years after they have that mortgage, yes, the balance will be significantly higher. It could be around 200,000 more than where it was, but they're banking on that value also increasing because they're going on the 2 to 3%, annual increase in appreciation on property. So, there's this analogy, and it's been very successful in Canada on real estate. So that's why the reverse mortgage product has been very lucrative for the lenders that provide it because they see that it's a product that they're not losing on.
Okay, now when it comes to reverse mortgage, does it impact the inheritance leaving to a child or your estate?
Well, it will to the sense of the fact that it'll be based on at the time when the property is sold, what that property sells for, and what the balance of that mortgage on the reverse is. Right?
So the unknown, that's the unknown.
It's unknown,
Okay.
but there is equity in that home. So, but that would be for anyone, right? Mm-hmm. So at any time the market could shift. It could be a seller's market when you need to sell that property. And, I say a lot of times there's markets where people win the lottery. It's not very often, but there are. And then there's more of a buyer's market that we're in today right now. So you can negotiate on values, but still most of these properties are detached homes too. And detached homes hold more value in Canada. When you look at it traditionally, it doesn't matter what market you're in, they're still going up 3 to 5% on average, even in a slower real estate market. So those are more in demand. And I find that those properties tend to hold the value, but there tends to be more equity there, thus being inheritance. The other thing too is that, and I'm going to go back to the mortgage product where you can take out equity at the beginning to give to your children for inheritance. But there's still equity in that property that probably needs to be divided up when the homeowner passes away. Right? So these are the discussions we have with people. We make sure they have a lawyer. We make sure that they have a will in place. We get them independent legal advice so they understand where they're at. And because this isn't a product that you take lightly, you really need to understand and have good clarification to know what you're getting into, but also to make sure that you understand how your financial situation is going to be at the time when we actually close on these. Because most people don't budget, I would say, to what they need to do in life. So this helps you budget and it helps you stay in a comfortable lifestyle, but it wants you to stay in that lifestyle, right? So you don't want to be like spending everything and not having money, but you still have to be financially responsible.
Sure, and the unknown's health, as you said. We have health care, but that doesn't take care of every expense. And we'd all love to have a beautiful retirement. But I'm telling you, we're talking to Tracy Valko, founder of Valko Financial. For more of your answers to the questions, valkofinancial.ca. How about for you? What do you got coming up?
We've got actually quite a bit. We're very busy right now, helping a lot of people restructure their mortgages. We've got a lot of people coming up for mortgage renewal. So actually this week I'm hosting a webinar on mortgage strategies for your upcoming renewal. and how to be able to save thousands of dollars with various financial strategies that I've developed to help people with renewals. So
How do we get involved in that? That's
yeah.
good info. How do we
So
sign up for that?
so you can actually connect with us on social media. There's a link on my Instagram to be able to register for. It's a free webinar. It's on our Eventbrite as well and our website. So we've got lots of access for people to be able to see that. And you can just access that on valcofinancial.ca. And then my webinar I'm hosting on July the 22nd, I was going to do on debt consolidation. I'm tending to think I'm going to probably switch to reverse mortgages and really go through some very exact examples of ways to be able to do that, because the reverse mortgage has become such a topic of conversation.
All right.